Okay,
All
cool.
right, we're recording right now, guys. Well, welcome, Jesse.
Hey.
Really great to have you here, representing Bloom. Um, love to start by maybe asking you for an introduction of yourself, your team, and what you guys are doing at Bloom.
Absolutely, really excited to come on the show. As a quick overview, I'm Jesse. I'm one of the co-founders of Bloom. Some background: Bloom brings credit scoring to the blockchain. It's kind of like an alternative to the traditional credit bureaus or FICO. I'll get into the details of how it works exactly in a second, but to give you a little bit of context on the background of the team, I studied computer science at Stanford. That's where I met my co-founders of Bloom. They actually co-founded the Stanford Bitcoin group in early 2013. And since then, I've been involved in a number of blockchain projects. They actually built a company called BlockScore, which is now called Cognita, which powers the identity verification and compliance for a number of leading crypto exchanges like Coinbase and many others. I worked on a big data and analytics company, and over the last year or so, we came together to build Bloom, which is bringing credit to the blockchain.
Which is very timely for what we're doing right now, given what's happened at Equifax and the like. Um, so maybe give us a little bit of context. How long have you guys been working on this? Was it, I mean, was this, I mean, this is obviously before the hack happens.
Yeah, much before the hack happened. I mean, it's been we've been identifying a lot of the problems with credit over the last few years, and so this has been a conversation that we've been working on. The first time, we even mentioned this publicly was probably 2013. There's Reddit threads us talking about problems with identity, but let's see. Some of the problems that were really kind of got us really going. The Equifax hack was a big one, and we actually launched it right before then. But around the world, there's problems with in China, your political affiliation can influence your credit score. In the UK, your voting status can influence your credit score. In other countries, religion can influence your score. Scores don't port across borders, so when you move to a new country, your score resets. And all of your information is held in central data repositories, which, like you said, is the Equifax hack, which was a huge, huge risk. And so about a year ago, we started to put the pieces together, and then we've been really heads down in development for the last few months, and we're getting close to release the first version publicly.
That's awesome. How big is the team right now, and are you guys self-funded?
We're self-funded. Both of our last ventures were successful, and so we were able to self-fund it quite pretty much for as long as we need to until we're ready for more. But we have, let's see. Well, there's about 15 of our friends from Stanford helping out in some capacity, and then lots of other people from our immediate network that have joined, to help out. But working on it full-time, day-to-day, there's 7 people.
Got it. And so I guess the $64,000 question is, I think everyone in our group has been wanting to know is, give us an overview of your implementation, right? So in this whole new world of credit scores that are powered by Bloom, how does it compare to the old world? And what are some of the innovations and that are brought forth by having this be based on the blockchain?
Great question. So it's actually a 3-part answer. First, a couple of problems with the old world, and then how we address them, and then each part. I'll go through it fast. But basically, in the current world, 3 billion people don't have credit scores, which means they can't even get a $10 loan. They resort to basically fraudsters and gangsters and illegal underground lending, like the payday loan shops of the world. And so that's a big problem, because most of them don't have credit scores because they don't have an identity system in their country. That means if you don't know who someone is as a lender, you can't lend them money because they could run off with the money. So the first thing we do is called Bloom ID. And this is a global decentralized identity system. This establishes what we call a federated identity, which means that it ties people's online or offline identities to online. And once we have someone's identity, the second part is called Bloom IQ. Bloom IQ is our system to port in all of the available financial information. So we're taught, if they have a credit score, we port that in. Utility bill payments, cell phone bill payments, any sort of information that we can use to paint a clear credit picture is ported in Bloom IQ. Then once we have the identity and once we have all of the financial data, Bloom Score ties it all together. It's our global credit score and risk assessment algorithm. That's what lenders actually use. These can be traditional lenders, think banks, credit unions, or they can be crypto lenders, think lots of crypto lenders out there. And so those are the three main components of our system.
Got it. And is your business model then, so backing up a bit, right? I think one of the knocks on the traditional credit agencies are they have a bunch of business lines, some of which are tangential to really this whole idea of credit servicing, right? So they could sell your credit to, sort of as a data service to someone else where you're not applying a credit card or doing a credit check, right? Do you guys, are those ancillary services, do you guys do that, or do you guys just focus on the credit part?
That's a fantastic question. They do have a lot of distracting things, and not only is a lot of the data they're selling distracted, they also don't even have much of an incentive to improve their scoring. Like you said, they're very distracted with making money, and so a lot of the factors added into FICO haven't really been materially updated since the 80s. And FICO, 90% of U.S. lenders use FICO, and it's similar levels of centralization around the world. And so to answer the question specifically, we actually don't make money every time a Bloom score is issued or scored. It's a decentralized protocol. So what that means is it's kind of like email or the internet or Bitcoin, in that lenders and borrowers and everyone joins the network. We raise money as a company, but nonprofit has a lot of legal connotations to it, so we're not technically a nonprofit. But basically, the Bloom HQ functions just like a nonprofit. We don't really make money, and the business lines we do have are for just to pay for the development, not really to generate a huge skyscraper and hire 1,000 employees.
Yeah. Got it. And you guys are building on top of the Ethereum blockchain?
Yep, Ethereum blockchain and IPFS. It's pretty heavily integrated into both. IPFS stores a lot of the information, so it's very heavily integrated into IPFS. But Ethereum is the transaction and token system, as well as a core part of where Bloom IDs are stored on chain, and so it's tied into both pretty deeply.
Got it. I know Greg and I don't want to hog the mic, but I know Greg and Arthur have some technical or product related questions too.
Yeah, absolutely.
Arthur, by all means.
Greg, you should go first.
So let me find it. So kind of referring back to how your Bloom score is really similar to a FICO score, Vantage score, and stuff like that. Mm-hmm. But in your white paper, you mentioned, but with updated models. Is there any way that we could dive into how you're updating those models and kind of providing a little bit more value than what's already on the table out there?
Totally. So I'll start high level and then give specifics we can dive in. But essentially, traditional credit scoring relies on debt repayment. So if you don't take on debt, you can't really have a credit score in most traditional models. Meaning if you're a millennial and you've just decided to never take out a credit card, you're not going to be able to get a house or a mortgage, even if you have more than enough cash in the bank. And so it's actually also proven that a lot of the factors in traditional credit scores, like mathematically proven time and time again, every year there's a research paper that says that things like when you check your credit score, it goes down. Things like if you close an old inactive account, these things lower your credit score today, but they've actually shown that they don't actually have a real impact on your ability to pay back debt. And so we're really just updating with a lot of the new research available, but then we're bringing in more data, a lot of disparate data. So we're talking about, have you paid your cell phone bill on time? If so, how long and how many missed payments? Have you paid your utility bill on time? If so, how long and how many missed payments? What's your bank account balance? What's your average income band? There's lots of factors that you can take into account, including have you ever been, how long have you been at your current place? I mean, there's all this different metadata that we can port in Now that said, a lot of it's theoretical only. And so we are also porting in FICO and the traditional scores. And so at the start, it's going to be as good because the traditional scores are part of the model. We're not saying we're going to reinvent the whole system from the ground up tomorrow. We are starting with what's out there, but we hope that over time, as more signals come in, we'll be able to, obfuscate and advance the current models.
Nice. I think that's a super strong play too, because, the data that's out there, that's at your fingertips, if Bloom's coming out and really kind of having that advantage right there, I think that opens up a world of opportunity for you guys.
Thank you.
That's great. Hey, Arthur, you got one?
So I actually a couple of questions. Just like Greg, I was very nosy and dive a little bit into the white paper. And so because we are all technical guys and I'm lazy, so I'm lying down on the couch or something. But for the most part, we're technical guys, so we love to dive into technical details. Basically, there are three components in the Bloom so-called business model. There's the Bloom identity, Bloom scores, as well as Bloom token, if I remember correctly.
Bloom IQ, and then the Bloom token is what there's a lot of uses of the Bloom token, but it's
more like a product. It's more like a product. It's a Bloom IQ and Bloom
right.
scores.
Right.
So the first question I have is about Bloom ID, because I think when you try to verify the identity of a certain person, and that is one of the key to address the issues of a lot of people couldn't get credit because they don't have identity, right?
Right.
Then, in that case, you would need to have multiple players in the market that join the network as a node. And just like how Bitcoin works, the miner are basically the nodes, and then they come by and say, well, okay, I'm willing to attest the identity of a person. Now, so there are two questions in my mind. So number one is, who is going to verify these nodes as person who as organizations who is attesting the identity. Now that's important, because if Bloom is the centralized authority to do such thing, then Bloom become the single point of vulnerabilities.
Yep.
And so that's a very, in my mind, I don't know how to wrap it up. Just reading the paper, I don't understand.
Right. So I can totally answer that if you want, or unless you wanted to ask another question and then come back.
I think the second point is, this is a peer-to-peer network. Do you need these participants to do any kind of proof of work type of thing like Bitcoin to join the network, or is it something like a submission process as you mentioned in the white paper? Right.
Yeah.
So those are the things that I couldn't wrap my mind.
No, they're very important questions, and they're probably the most. They are some of the more complicated aspects of the protocol. So I'll try to distill them down. You actually summarized it really well. In our network, third-party nodes, third-party identity verification companies are the ones that verify your identity. That's where trust is built up. Each node's signature is just like a Bitcoin confirmation. If you have an identity with no attestations, we call them, no nodes signing, it's like a Bitcoin transaction with no signatures. It could be valid, but it could not be. And if it has one, it's maybe valid, probably, but you should probably wait for more. And so we already have partnerships with a lot of these, but they're the same people who verify identities today, which is like banks, credit bureaus, utility companies, data providers, data warehouses. There's all sorts of companies who have lists that match up. Like your utility company has your name and address. So if we send them a given name and address, they can say, yeah, these match, and they'll sign that they verified the address. Your cell phone company has your name and phone number. So if we send them a name and phone number, they say, yes, these match. And then adding all up, it says, we verified the name, phone number, blah, 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 blah. And then it starts to become a very, valuable identity once a bunch of different parties have each verified their little piece. Now, that is a point of failure. If we have bad nodes join the network, they can, receive lots of personal information when they don't actually have the ability to verify it. That's a huge point of failure. And so we're really, really sensitive to that. And we have a whitelist where token holders can essentially mark nodes as bad nodes. And then we have some technical methods to see if people are just auto-verifying or auto-denying things. And in the start, for the first couple of years, it's going to be pretty tough to become a node. You're going to have to basically exist in the traditional world, like be a bank or be a credit bureau, and you're going to have to work through personal relationships with the Bloom team. But of course, over time, our role in the network will phase out, and it will be up to the people, up to the token holders to sort of govern the whitelist.
So
Nice.
in a nutshell, if I summarize what you said, those are the mechanism that is probably what I would describe it as an innovative mechanism to create a consensus mechanism within the network.
That's right.
And that is something that pretty much like the Bitcoin mechanism, but in a way you impose other methods such as whitelisting, as well as a stricter control and presumably some screening on the Bloom part to make sure that the first initial sets of nodes are all motivated to the cause of Bloom,
right.
of the Bloom protocol.
Exactly. And they do have these, we're not convincing a node to do anything they don't already do today. These nodes have businesses where they verify identities. And so we're going to the same partners that, the credit bureaus are using, the same partners that lenders today are using. We're just bringing them all in one place. Oftentimes today, when you apply for a loan, they might run it through one, maybe two identity verifiers or background checkers. Bloom's going to be ran through like 20. And so if one or two nodes, are inaccurate, that's actually okay, as long as the vast majority are accurate. And then the secondary point of this is the way we transfer information is highly protected. So there's always vulnerabilities that's, information could leak out of the network. But in our model, most things are hashed, meaning no actual personal information stored. Anything that is traded between two parties is using public and private key encryption, as opposed to literally plain text, which is how it is today when you write your social security number on a loan application. And so is it immutable, absolute, perfect? Is there no way? No, there's obviously vulnerabilities, but it's a large step forward in security.
I totally understand that. Even Bitcoin, there's a theoretical limit of, say, if there are 50% of adversarial nodes joining the network, it will actually overthrow the stabilities of the network and allowed malicious attackers to form an alternative change. So. Right. So that is, I think, is a very fair thing, and I actually appreciate your explanations because that explains a lot how you, how you initialize the network and grow your network, and two, how you try to protect the network against malicious attack.
Yeah, exactly, and that is the thing we're most sensitive to. We were sensitive to it before the Equifax thing, before the Equifax data breach, but now our partners are especially sensitive to it.
Absolutely.
We actually had Brian Krebs. He's a big security researcher. He broke the news on the Target breach, the Stuxnet nuclear virus, lots of other things. He publishes a blog, and he tweeted about us raising awareness that our method of security and data transfer is a lot better than Equifax's, and so it was good to get his kind of endorsement, if you will. But we're looking to get We really want this to be the most secure network out there, and you're never going to have perfect information security, but we want to take every precaution that technology allows us to take.
Yeah, when John Oliver is doing segments on Equifax, you know how bad it is. You know how bad it is.
Exactly.
Yeah. But I mean, that's a monster opportunity right there, and it just positions Bloom in such a way where it's kind of amazing, like how kind of set up you guys all kind of the team is. I had a second question. So what I found super interesting, and I think a lot of people who might have not have read the white paper yet or something like that, Your peer-to-peer attestation and vouching, I thought was really, really cool. And maybe you could just kind of like go over like how you guys, you know, implement that whole thing and you know, just a more like kind of top level overview on that whole thing. I think people would really like that.
Yeah, so here's the big problem. You're not part of a financial system. You don't have any, you've never taken out a utility bill. There's no one that can vouch for your identity. What do?
Right.
How do you join the financial system? Well, traditionally, you get a cosigner. You get a cosigner that says, I have a credit score. And so in our model, though, we think there's a lot of problems with cosigning, but fundamentally, it does work to have someone say, I am willing to put myself on the line to verify this person. And so what our peer-to-peer attestations are, is it's a way to bootstrap people into the network. It's kind of like cosigning, but instead of that person having a financial downside, it's more of a technical way to incorporate them in the network. You get people to vouch for you. And so you could imagine people, in developing nations where some people have bank accounts, some people are part of the financial system, but others aren't. They can now go to their friends and say, vouch for me. And then Bloom can then analyze, their network effects. That's also another way to secure the network. It's another form of identity verification. And again, is it perfect? No, but it's just a way to get them their first $100 loan, a way for a lender to have some bit of information on, okay, this person's a real person. They belong to a social network. We know who their immediate friends are. Their immediate friends are financially, worthy of a loan. And so it's just like co-signing, except you can get more than one person to co-sign or vouch for you. And then there's no financial downside for the people that are vouching for you.
I love that. It was great. When I came across that, I was like, nice. I really like the implementation of the whole thing. And I think, that whole scalability, thinking about the future and saying, hey, this is what we're looking at right now, but setting yourself up saying, hey, we can move in this direction using these network effects to kind of adjust how we look at things. I think that was a pretty powerful and interesting thing that I read. I really liked it.
Thank you. And I think it is often overlooked because it's going to be a while until, people are staking dozens of their friends and until we have penetration in those markets. But right now, the only way that it's going to improve without this sort of peer-to-peer methodology is if a government makes a big push for a national ID system, which is happening in countries like India, but it's not yet happening in a lot of other countries in Southeast Asia, Africa. The governments aren't really pushing for a national ID system, which means oftentimes the governments don't even know for sure who each person is. They don't have birth records. They don't have, driver's license often. They've got passports, but something only, in some markets, only 5 or 10% of the people have passports. And so once someone has a credit history, once they've taken out a loan, paid it back, once they've verified who they are through other sources, the peer-to-peer vouching kind of becomes less valuable, but it's a way just to get started. And that's
right.
That's helpful.
It's building that bridge with the here and now and kind of scaling into that future that I think you all are on the right track right there. I think that was great.
Thank you. Appreciate it.
And one question, where are you guys in terms of your roll up right now? Where are you in terms of the product, and when do you guys expect to roll it out?
Yep. So we've been working on it for a while. We've obviously been in the space for many years. We're going to be doing the first components of our protocol are going to launch Q4 for sure, and actually sooner than later, so probably in the next 1 to 2 months. Our full open source developer protocol will launch in Q1 on the testnet. That'll be like the first live deployed version. Then from there, it's kind of unclear on exactly how long it'll take us to get the testnet to a market-ready version, but we anticipate the first live loans being issued on Q2, Q3. We already have those partnerships in place. We've already announced some of them on our blog. There's more coming. And so, we have agreements with the lenders. The first version are going to get rolled out in the next month. The developer API is going to get rolled out in Q1. And then we're on pace to kind of begin achieving the vision, if you will, with live loans. Too.
Got it. So pretty soon.
Like ready to go.
Yeah.
Yeah.
That's awesome. And would you guys, like other folks, given the fact that you guys have have a token associated with the service. Would you guys contemplate going through an ICO before you guys do a public launch for the product?
Yeah, we're going to do some level of a public launch before a token sale, for sure. Even if it's just a portion of the application, we think that's pretty important. But there is going to be a token sale, probably sooner than later. More towards Q4 than Q1.
Yeah.
Talk a little bit about how the token's actually used. The token has three components to it. The first and kind of the least valuable is it's a payment and settle token to pay the data providers for their information. But the more valuable components is it's actually a mechanism for governance.
Right.
A token is a vote to keep the network decentralized to vote on the score. And a token, the most valuable is tokens are tied to the actual lending and actual identity creation, which means that in order to generate an ID, you need to put up a little bit of token, either you or your lender does, which makes it very difficult for a fraudster to try to brute force a billion IDs until one of them works out. But the other side of this is there's more demand for tokens as the network grows, which is more valuable to keep the network in check and to balance everything out.
Yeah. Yeah, and Jesse, where are you in terms of on the business side, talking and getting some of these, participants in the ecosystems, the credit card companies and the banks and the like, potentially using you guys when you guys head out?
Really far. We're now in a position to begin announcing our first partnerships. There's already some announced. You can check out our blog. We have. I don't want to say anything prematurely, but some of the largest global lenders are already
Sick.
Yeah,
That's
Sick.
awesome.
That is awesome.
Names that definitely everyday people would recognize if they're familiar with lenders. And so, and it's just going to be a long game. And even getting a few of them, means we have like 0.000 something 1% of the market. And so it's going to take years to really make a dent into the global financial system. But we're starting with credit building lenders is a big component, lenders that take a little bit of additional risk to bring people into the financial system. But we are absolutely also working with very, very large traditional fiat lenders as well.
Got it. That's great. Unfortunately, Zoom, we have to upgrade in 5 minutes. Last few set of questions. I think we covered a lot of the meat, which is great, Jesse. I think you gave us and the audience a good sense of what you guys are doing and the big problems that you guys are kind of munching on. Greg, Arthur, any last couple of questions?
Here, let me just see what I highlighted.
I have one, Jesse. Another one. So this is a big problem, obviously. What do you find as you guys kind of start rolling out products out, right? And you guys kind of have a focused way of doing it and staging the rollout. What do you find is sort of like the first, what is the, if you were to pick the number one driver that would make people adopt your system? What do you think that is? Is it on the institutional side? Is it something else? What moves the meter for you guys in the beginning?
Well, first, there's a few things we're trying to do in parallel. One is build up a really large community of supporters and advocates. That helps us get connected with more people around the world. And so, on that side of things, we're super active on Slack. You can always message the team all day. We're actively involved on Reddit. I mean, it doesn't seem natural like that would be our audience, but we've gotten incredible introductions just kind of out of the woodwork that way. Now, in terms of who we're actually targeting, who we're actually going after, three people. First is alternative lenders, which take a little bit of additional risk to kind of, that's their market niches. They take additional risk. And so these are credit building lenders. These are alternative lenders. Think the SoFis of the world and the various ones of those types of business models. The second people we're targeting is the data vendors and partners to actually bring data into the network. And then thirdly is we're targeting various partners and trusted nodes around the world to help bring it globally. We aren't actually targeting borrowers because we don't make any loans. The lenders already have mechanisms to reach borrowers.
Sure.
And at some point, we're probably going to be building like a marketplace, like an app that people can scroll through and see all of their loans.
Yeah.
But at the start, it's really lender heavy. And we've gotten great relationships with lenders so far, but we're building the community in order to reach more lenders and partners.
Absolutely.
Cool. All right, with 3 minutes left and counting. Last
I got one.
I have one.
Go for it, Arthur.
Oh, sorry. You go for it first. My bad.
No, dude, I grabbed the first one last time. It's all you got.
All right, 2.5 minutes.
All right, Bloom. There's Bloom token. There's Bloom card. What is the difference?
So Bloom Card is actually developed by external parties. It's a project built on top of Bloom, and it's a credit card. It uses the Bloom network, but it's not part of the core protocol. It's just like any other lender doing their own card. Bloom Token is, like you said, the settlement governance and fraud security mechanism of the platform. It's core to every single action on the platform. And the token would be launched during an initial token sale. And we expect the largest holders of our token to be our lenders and partners that use the token.
That's awesome. 40 seconds. It only takes 40 seconds. Like it only.
Awesome. Well, hey, Jesse, this is great. I really appreciate it. We'll send you a link to the video once we post it up to YouTube.
Absolutely.
Really appreciate it.
I love it. Well, we're happy to share it. It was really great coming on, and excellent questions. I think we covered a lot of technical ground, but also introductory enough that everyday people can start to wrap their heads around it. So I really appreciate it.
Nice, no problem.
All right, let's keep in touch.
Join us on Slack.